It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier He Lifeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Bonnie. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Bonnie, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Bonnie, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Ivani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JPMorgan's Priya Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and Lukoil. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important. And also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump. And then yesterday, Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the US and China are set. China saying Vice Premier He Lifeng will meet with US officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit. And we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the US and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trades are there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15% and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg.
Voters are going to have to decide in this election what candidate has the plan to save the city and what candidate can get it done, not just talk about it.
I am the sole candidate running with a vision for the future of this city.
My main opponent has no new ideas. He has no new plan. It's Bill de Blasio rehash, and we know how that turned out.
Andrew Cuomo will spend much of tonight attacking me. He is a desperate man, lashing out because he knows that the one thing he's always cared about, power, is now slipping away from him.
Zoran, your resume could fit on a cocktail napkin, and Andrew, your failures could fill a public school library in New York City.
The three candidates in New York City's mayoral race debating for the last time last night. Former Governor Andrew Cuomo looking to overturn a double-digit polling deficit to Zoran Mamdani with just 2 weeks left in the campaign. Joining us now is Bloomberg's Miles Miller. So, Miles, during last night's debate, Zoran Mamdani looked like a front runner. That was last week, and then we had last night. How did it change the polling?
Yeah, last night you saw the two other candidates in the race, Andrew Cuomo, Curtis Sliwa, really trying to define Zoran Mamdani as more of the same, and the same being Bill de Blasio. They were able to sort of knock him off of some of his key proposals and to get him to really talk about some of the issues that he's not defined in the campaign. He could not say why he does not want control over city schools. He could not say why he didn't support ballot initiatives that are coming up during this election that relate to housing. And the subtext of that is because those are ballot initiatives that are not supported by the city council, which is overwhelmingly very liberal, and our ballot proposals that are supported by the unions that have backed him in this race. But yes, Zoran Mamdani didn't stumble much, but he did have to answer for some of his key policy positions, but he gave it right back to Andrew Cuomo, saying while he was governor, all he did was put in a fancy fountain at LaGuardia Airport, didn't do enough for affordable housing nor education.
Curtis Sliwa, does he drop out?
Curtis Sliwa is staying in the race. He yesterday announced that he was resigning from his job at WABC Radio just down the street, and really because he said of pressure by the owner of that station to get him to drop out of the race. You know, big-time Republican donor, and really someone who is close to the president, who is asking for this to be a two-person race. But if he were to drop out in this race, nothing would happen with this. He'll still be on the ballot, but it's a money thing. If he drops out of the race, then he'll be forced to pay back some of that money that's part of the campaign financing program.
You know, it's gaining momentum. There's 2 weeks left. We've had all the debates now. New Yorkers are paying attention. What are we anticipating turnout will look like? And I guess it depends, like it always does, on things like weather and so on.
Yeah, so when you look at the primary election, right, this is a very energized base. Usually younger voters in this kind of general election, you know, we're going to see, you know, which kind of voters come out. Will it be the high propensity voters or will it be this new coalition? Andrew Cuomo is banking on his strong Democratic base will come out for him, and that the liberal base of the Democratic Party that voted for Zoran Mamdani, as well as the moderates, will listen to some of these attack lines, will listen to some of what the business community says and go for him. But Mamdani seems to have gotten a pretty big coalition together. Just yesterday, announcing with the New York Times that he's going to keep the current police commissioner. That's going to be good for the business community, considering she comes from the business community, right, to family and business, owning Lowe's hotels. And so, definitely something that will bolster his support with people who may be a little shaky about his candidacy.
And there was definitely skepticism that he would keep Jessica Tisch, right? So I'm curious, where does the spending happen over the next 2 weeks?
The spending is going to be in the ads, right? You saw yesterday Zohar Mamdani putting out an ad during the Knicks game, right? You had him on stage on New York 1 and other places, but during that Knicks game in this New York market, spending some of that over $7 million that he's brought in to get some of those people to see who he is and get his record out there. Same with Andrew Cuomo and same with Curtis Sliwa. But the spending is going to be focused on advertising and also the get out the vote operation. How will Andrew Cuomo move these people to the polls who just a few months ago in June said, we like Zohar Mamdani?
Yeah, absolutely. Miles, thank you so much. Staying up late to watch that debate. And in early this morning, that is Bloomberg's Miles Miller. Let's take a quick look at the markets now in this early going. We do look to gold and oil markets first. Oil, of course, the big story today with fresh sanctions placed by the US on Russian oil companies Lukoil and Rosneft. It was unexpected. It's a U-turn on the part of the administration, certainly having an impact on oil markets, although analysts are not finding a consensus on whether this oil will still get to market or not. Gold, as you can see, steadying after 2 days of declines above 4,100 now. Does this raise the temperature geopolitically? And of course, we're all waiting on CPI data tomorrow. Today is another Thursday where we don't get initial jobless claims. Coming up, we'll bring you our latest conversation from the David Rubenstein Show with Harvard University President Alan Garber. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. In the latest episode of the David Rubenstein Show, Peer-to-Peer Conversations, David spoke with Harvard University President Alan Garber on the institution's recent changes to admissions policies as uncertainty around visas lingers.
We had announced in the first official communication upon the release of the Supreme Court's decision that we would adhere to the law, not change our values and principles, but we would certainly adhere to the law. The specific measures that we've taken have been many. We've made sure that in the admissions process, nobody involved in making a decision about admissions has access to the check the box, what's your race, what's your ethnicity, etc. So they don't have access to that information. Of course, if there's an interview in an essay, aspects of identity will come up, but we do not provide that information to the admissions officers where people identify. And I would add that we train them to make sure that they don't consider these characteristics that are prohibited from consideration through the SFFA decision.
You're talking about immigrants and how the major universities have brought a lot of immigrants over, and they were great faculty members and researchers. What about getting foreign students today to American universities? Do you actually feel that foreign students are now afraid to apply because of visa problems, or they think they won't get in because there's going to be some discrimination against foreign students? How has the whole concern in Washington about foreign students and foreign faculty affected Harvard?
For many programs, there is a lot of hesitancy about attending college or attending graduate school in the U.S. because of uncertainty about visa status and whether that could be taken away. At the same time, this year we've had a lot of success, and the students who were actually admitted virtually from other countries, virtually all of them have been able to attend. So it's too early to have a confident answer to your question, but we are worried. And I want to say one other thing. They aren't strictly speaking students, but postdocs. That is, the postdoctoral fellows who work in our labs, in the hospitals, and in other parts of the university. There is some evidence that fewer of them are applying for jobs in the U.S.
To watch more of David Rubenstein's interview with Harvard University President Alan Garber, watch The David Rubenstein Show, Peer-to-Peer Conversations. Time now for your front page news. First up on the Wall Street Journal, the Trump administration is in talks with several quantum computing companies for equity stakes in exchange for federal funding. People familiar with the matter telling the Journal the companies include IonQ, Rigetti and D-Wave Quantum. Next up, the BBC leading with US forces striking a second vessel in the Pacific, killing 3. That's a day after 2 people were killed in another strike. Defense Secretary Pete Hegseth saying both vessels were believed to be carrying drugs along known trafficking routes in international waters. The strikes are the 8th and 9th against suspected drug boats since September 2nd, but the first in the Pacific. And people familiar telling the Financial Times Andreessen Horowitz is aiming to raise about $10 billion for new investments as the Silicon Valley VC group tries to replenish coffers amid frenzied deal-making for top AI and defense tech startups. It would be Andreessen's largest fundraise to date after a $7.2 billion fundraise last April. It would also be a step up from a $9 billion raise during the tech boom in early 2022. Coming up, we're going to look ahead to tomorrow's anticipated CPI data. Yay, data! With JPMorgan's Priya Misra next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging. It's a U-turn for the Trump administration as the U.S. announces sanctions on Russia's biggest oil producers, citing a lack of commitment to peace in Ukraine. China's Vice Premier He Lifeng will meet with U.S. officials Friday for the next round of trade talks as the U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy session yesterday. It looks like markets are trying to find direction, at least equities markets today, as it's another Thursday where we don't get jobless claims, but we do get plenty of earnings, and we do have yesterday's session to digest as well. The Nasdaq 100 at one point was down 1.9% in yesterday's session, finishing that session down 1%. Let's take a look at bonds. We're still below 4% on the 10-year, but just barely. We are up about 3 basis points, as you can see. The 30-year yield, though, still at 4.57, and the 2-year 3.46. We're going to be talking about the bond universe in a moment with Priya Misra. And then take a look at oil, because that's where the action is for the most part today. Off its highs now, but Brent crude is still above $65 a barrel and WTI above $61 a barrel as these new sanctions are imposed upon Russian producers. Will that oil get to market? Will it deter Russia in its effort to continue this war? Well, lots of questions to be asked. Now let's get to some individual movers. Over to London and Valerie Teitel.
Good morning, Bonnie. Let's start with a check on Tesla. Out with earnings after the bell yesterday, disappointing investors. The shares are dropping 3.2%. This is on the back of a disappointing operating profit. It sank 40% year on year. A lot of this having to do with the price war going on in EVs. Tesla had to slash a lot of its prices last quarter, and that leading to some margin compression, even though they had record sales ahead of that EV tax incentive rolling off at the end of September. Now, their business model is under a lot of threat, shall we say. We both have Trump rolling back those EV tax incentives. We also have him deregulating those gas guzzlers. So Tesla declined to give guidance in the interview yesterday. Also in the share call, there was really no substantial update when it came to their plan with the robo-taxi rollout, the autonomous vehicles that investors really want to hear more updates on. So Tesla disappointing, down 3.2%. We also had disappointing earnings from IBM. This one was more focused on their hybrid division, Red Hat, seeing a slowing in momentum in sales growth. IBM down 6.7% in the pre-market. Now, Wall Street was more focused on this Red Hat division because it's more of its AI cloud business, and it does seem to be like it is sputtering. So IBM shares disappointed after results. Lastly, let's end more on a positive note. The Wall Street Journal is saying that the U.S. Administration, the Trump administration, is looking in direct equity stakes into quantum computing stocks. So we are seeing these quantum computing names surging in the pre-market, one of them being IonQ, up some 14%. Now, Vani, perhaps this is a sign that the Trump administration is looking at more creative ways to boost its interests. A breakthrough in quantum computing would surely make those AI data centers more efficient.
Yeah, well, that's for sure. Those stocks had been seeing a huge run-up before the latest pause as well, Valerie. Rigetti, for example, up 136% this year, and that's before today. That's Valerie Teitel in London. Well, as investors await delayed CPI data tomorrow, the market has been consistent in pricing in a Fed cut next week. JPMorgan's Priya Misra says, quote, government bonds are doing what they're supposed to do. She writes this: we don't think CPI will be a big market mover and don't think it will deter the Fed because tariff-related inflation should be one-off. We're not seeing wage inflation and the labour market is weak. I'm pleased to say Priya joins us now. So that's all very well and good, and it's likely we'll see that cut next week, but none of those things that you enumerated are very good for the economy, particularly the lack of wage growth and this job market being a little weaker, Priya.
So I think what we're seeing is a structural, strong economy with the AI theme. There's also this K-shaped idea, where the large companies, they're able to handle tariffs. If you have money, so if you have a job and you have assets, financial conditions are really easy. And then you've got the other side of that K, which is small businesses still dealing with tariffs, still dealing with uncertainty, immigration uncertainty, and you've got the lower income, households that are struggling. So I think that's the structural side. And then I think we're still dealing with uncertainty around tariffs. What companies have done is, if they've not been able to pass on, and we'll see that tomorrow, maybe goods inflation does start to pick up, but it hasn't picked up as much as I think a lot of economists expected, is because I think people, the ability for the household sector to absorb higher prices is lower because of that wage inflation point. So I think that's why, what are companies doing? They're just not hiring. They're paying for tariffs and maybe some more uncertainty by not hiring. That's the tension we're in. Do we stay in a low hire, low fire economy, or does that actually start to move in? We don't have claims, and I can't imagine Thursdays without claims. We're getting used to now looking at lots of other data points. We're not seeing the pickup in firing, so that's good. We can stay here where the structural positives keep risk assets strong. But I will highlight dispersions picking up, because you've got the cyclical side as well, where the economy seems to be slowing. The labor market is slowing, there's no question.
Just on that note about AI being a structural positive, a structural foundation maybe for this economy, what convinces you? I mean, we're starting to see layoffs even there. At Meta yesterday, for example, 600 layoffs in that arena. And also, whose job is it really helping?
So I think what AI can do is raise productivity for people who are working. It is going to create new jobs. I mean, I look at every previous technological big evolution, whether it was the .com time, or we're now looking at like railroads. Is this going to be as impactful as the railroads were, 100 years ago? And it creates its own set of jobs. You'll have people who are AI native, those kind of jobs will start. So I think you'll see a shifting in the labor market. But I think perhaps AI is one of the reasons why college graduate unemployment rate is starting to rise. So when we take a step back and think of what does this mean for the Fed, they can look at the AI productivity gain and be happy about that, and that helps, I think, stocks particularly. But if their mandate is the labor market, if the labor market is slowing, and to your point, maybe you even have layoffs in the tech side, the Fed then can at least reduce the restrictiveness. I think that's where we are, where why should monetary policy be restrictive here? At least start to get that closer to neutral.
Priya, we're in day 23 today of the government shutdown. Now, we may not have seen all the firings that we're going to see, but certainly there have been some, and I guess we don't know because we don't have data, right? Do government firings, will they impact the labour market that much?
I think if you actually get firings, I think it does impact, because the labour market is in a state of stasis. Meaning it's a frozen labor market. If you lose a job, it's much harder to get a job. You can see this in surveys. You can even look at earnings, and companies are not saying that they have lots of plans to increase hiring. So I think if government layoffs start, now right now a lot of them have been stalled because of the court ruling. If that changes and you actually start to see a pickup in government layoffs, I would get really concerned. And I think owning duration, you talked about how government bonds are doing what they did. This is a big difference from April. Remember when there was no place to hide. And now, even though the 10-year is below 4%, if you start to see the labor market showing signs of firing, whether government or the private sector, I think then the 10-year has a lot of room to decline, because then the Fed's cutting into accommodative territory, not just getting to neutral.
Yeah, I mean, Ed Yardeni yesterday was talking about 375 in the 10-year, but that was predicated on oil going lower, and it doesn't seem like, at least from today's headlines, that that's going to happen. But you still see a 10-year down at that range or even lower by the end of the year?
So in a sub-trend growth environment, ex-AI, which is a 1 to 2% type GDP, I think our 10-year forecast really for the last year and a half has been 375 to 4.25. So we can absolutely drift closer to 375 as people realize maybe I need some bonds in the portfolio. Bonds are giving you income as well as diversification. You just have to look at days like last Friday or the Friday before that. You have, we still have a lot of uncertainty around US, China, around these credit cockroaches, as we're calling it, which, can happen. I don't think it's a systemic issue, but if you have a lot of risk assets in the portfolio, I think owning bonds is what's creating that pressure for the 10-year that was getting close to 4.5 is now below that.
The incentive for going beyond that? So we have a 30-year yield today at 457.39, and if your scenario comes true, that could come down even further.
It could. I think some of it is a reduction in fears around either the deficit. Remember, just a few months ago, the concern was the deficit's out of control, there's a sell America trade. Well, we have now tariff revenues that are helping the deficit. They're paying for the one big beautiful bill overall if tariffs stay here. So I think some tariff concerns have come down. Fed independence, big concern with Lisa Cook firing, maybe Chair Powell firing. I think we've realized that's not going to happen. The Fed and the different Fed chairs that are being talked about, all credible candidates. I think the market's a lot less concerned. That's why the long end, I would say, has had this sneaky bid. As some of all those concerns, the term premium increase, that's been coming down. So, yeah, can we come down a little bit more? I think if the economy stays okay, you're probably looking at 10, 20 basis points. If we start to see further slowdown in the labor market and the Fed's cutting to below 3%, I think then that long end has a lot of room to decline. We still prefer the 5 to 10-year part of the curve, not too further out, because that is sort of a lot more duration risk. But I do think some of the concerns around the steepener and let the long end can go to the moon. No, I think fortunately a lot of that has been taken off the table.
Well, Priya, enjoy the CPI data tomorrow. It should be a major event, given that we haven't had any official data for a long time, although the actual data itself may not be too surprising. Priya Misra, thank you so much. Priya Misra of JPMorgan Asset Management there. Now to other top stories trending on the terminal this morning. China's Vice Premier He Lifeng plans to meet with U.S. officials in Kuala Lumpur from October 24th to 27th for the next round of trade talks. The Vice Premier, who's Beijing's top trade negotiator, held a call with Treasury Secretary Scott Bessent last week ahead of the planned in-person summit. Meantime, India's Prime Minister Modi will not be in Kuala Lumpur for the ASEAN summit, missing out on a possible meeting with President Trump. He'll now be attending virtually instead. He said he can't be there in person because India is still celebrating Diwali. The European Union adopted a new package of sanctions targeting Russia's energy infrastructure. This includes a ban on LNG imports from 2027 and a full transaction ban on Russian oil companies Rosneft and Gazpromneft. The move adds to efforts to chip away at Moscow's ability to wage its war against Ukraine. Coming up, Tesla extending post-earnings declines. We'll take a closer look with RBC's Tom Narayan next. This is Bloomberg.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Shares of Tesla taking a hit in pre-market trading. The EV maker's profit plunged despite a record quarter for sales. Joining us now is Tom Narayan, global autos analyst at RBC. Tom, thank you so much for joining. So you're keeping your price target at $500. Nothing about the quarter really spooked you in any way, would you say?
Yeah, that's fair. I mean, I think coming into this quarter, we already had the big delivery number. We already knew that was the good news. Maybe there was some bad news about how costs were a little elevated, right? They missed on the gross profit ex-credit margins. But that's really on the car business. I think what we're noticing the past couple of quarters is a decoupling from the narrative on Tesla, from a car business now to folks really looking at AI endeavors, notably robotaxi and the humanoid robotics space. So folks who are really interested in the car data are probably not going to be happy because those costs are going to only increase because they're going to spend more on AI. But those folks like myself who really view this company as an AI story, really more on robotics and on robotaxi, I think there's a better case to be made and to be looking at the stock from that perspective.
Yeah, it's fascinating, Tom. You just integrated humanoids into your Tesla valuation. This is after you visited Tesla's Giga Berlin factory. I'm so curious about that factory, especially the club downstairs. But what struck you, and how did you end up being able to, do the math on humanoids?
Yeah, it's really interesting. Prior to that event and to some, past couple of weeks, I really didn't know what to think. But we really, sharpened our pencils and did a lot of work on market sizing the robotics opportunity and actually talking to investors who are ahead of the curve, actually, even more than us, kind of telling us, what took you so long? And what we realize is this is actually a significant market opportunity. Think of all the monotonous and tedious jobs that could be replaced. And also the tech is really there. The question we do have, however, is what form factor will ultimately win out the space? China is a big player here. Will it be what Tesla wants, which is these humanoids, the same form factor for every task? Or will it be like a Rosie the robot from the Jetsons and something else for some other task? That's still an open-ended question. But the way we looked at it is, let's look at the overall market opportunity, and we think it could be like a $9 trillion market globally. And then we only assign 5% share for Tesla. So when you look at it from that perspective, a top-down and give a conservative path for Tesla itself, it actually seems compelling.
Yeah, he talked a lot about Optimus on the call. Let's move to Ford, because you're maintaining your $11 on that for your price target. Not too optimistic on Ford's prospects.
Well, it's more about just uncertainty. But I do have to say, if you reference GM, right, that reported earlier this week, a really surprising tariff announcement last Friday from the Trump administration that extended the MSRP offset to allow for more parts to be included. And you saw that GM was able to cut their tariff amount, which really means a bigger amount for 2026. We could see that surprise positively from Ford, but we don't know about some other things. Its EV losses are significant. They had that supplier fire, which really hit the F-150 significantly, and also, of course, warranty issues. So it's really more to do with the uncertainty, but certainly if you judge based on what happened with GM, it could be a pretty positive situation with Ford as well, but let's wait and find out.
But Tom, we don't fully know the impact of tariffs yet, right? We're not even sure if they're going to be upheld by a court.
Well, no, I think as it relates to the Supreme Court, that actually doesn't have to do with the auto tariffs, right? That has to do with the other sector tariffs. So I think the tariffs are here to stay. But more importantly, as it relates to the auto sector, the administration appears to be more friendly, and it seems like at least the informal deals that we have, right, the 15% level down from 25% for the EU, Japan, and Korea, that seems to be a starting point. And we could go lower, as we've evidenced from last Friday's decision. And then USMCA, right, Mexico and Canada, that gets resolved mid-year next year. That could come in at 15%, and then you could get carve-outs and credits, and maybe USMCA allows for U.S. contenting rules. So the point I'm making is the administration seems to be more friendly towards the auto industry, specifically the U.S. auto industry, making deals to lower the tariff level from that 25% level. So we actually see upside from that, as opposed to the tariffs not happening at all.
All right. Well, we will be watching Ford very closely later on today, trading currently just in the $12.43 range. That is Tom Narayan of RBC Capital Markets. Thank you so much. Another name we're watching this morning is American Airlines, earnings due before the bell, as investors will get updates on domestic demand for both leisure and corporate travel. Joining us with a look ahead is Bloomberg Managing Editor for Space, Aviation and Defence, Benedict Connell. Benedict, what do we anticipate seeing? We had Bloomberg Intelligence just recently saying that, at least in the case of United, the higher demand for the premium customer is getting exhausted. Will we see that here?
So we're going to get the numbers in about 10 minutes, so we'll know more then. But the expectation is that American Airlines is trying to sort of catch up with Delta, with United on the premium side of things. They're a little behind in that regard. Over the last couple of years, Delta and United have put a lot of resources, a lot of investment into that front end of the aircraft, and that's really paying off for them. We've already gotten their numbers. Delta was out first, then United, and they've really had a strong set of numbers, both for this quarter, but also into the outlook for the rest of the year. So the question really is, can Americans sort of close that gap? Can they also win more of those customers back? That's really where the money is being made. It's made in the front of the cabin, not so much in the main cabin, so economy. So investors will be looking for any sign that they are benefiting from that trend, because really a lot of people are still upgrading their travel, both on the leisure but also on the corporate side. That is coming back. So we'll also listen for that. Is there some stronger demand on the corporate side, on the transatlantic and the transcontinental operation? Those are some of the key things that people will be looking out for.
Yeah, about 10 minutes, as you say, Benny. Those shares down 30% year to date. That is Bloomberg's Benedict Connell. And don't miss our exclusive interview with American Airlines CFO Devon May. That's at 10:30 a.m. Eastern. That's on Bloomberg Open Interest. Coming up, we'll get you set up for your trading day with more earnings on deck. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. We get earnings from American Airlines in just a few minutes, and then Intel and Ford come after the market close. Plenty of others on deck as well. Fed Vice Chair for Supervision Michelle Bowman's Senate testimony scheduled for 10 a.m. Eastern. Plus another Treasury auction today, $26 billion worth of 5-year tips. That's at 1 p.m. Eastern. Let's take a look at some movers before the bell now. As you can imagine, Tesla is moving. Profit tumbled. Their costs undermined record EV sales. That stock down about 3.25%. And then we have IBM down more than 7%. The results for the software unit underwhelming there. It won't really help that President Trump is now considering not allowing exports to go to China of software without a significant tariff. And then we're going to have all of the quantum stocks moving today. IonQ, just one of them, but Rigetti, D-Wave and so on. There's a report out there that the US is mulling stakes in these companies, and we all know what happens to these companies when the US mulls stakes in them. Let's take a look at the macro environment on this day 23 of the government shutdown. So oil is obviously the commodity moving the most right now. We're above 61 and 65 apiece for WTI and crude. This as the US imposes more sanctions on Russia. It wasn't expected. It was a bit of a U-turn. President Trump also says he doesn't want to waste his time on a second meeting with Putin if it isn't going to produce results. And this is punishment for the lack of commitment to peace in Ukraine. And then gold is stabilizing after 2 days of declines. Let's take a look at futures. We do seem to be pointed higher, very, very fractionally after a very choppy and down day yesterday. And then look at the Japanese yen, 152.61, significant weakening there for the yen. The US 10-year yield below 4%. Well, that is it for Bloomberg Brief. Surveillance continues the conversation. Do stick around. This is Bloomberg.